Hello, everyone, and welcome once again to another weekend with Bearable King on Bearable Channel. This is our 21st week, and we'll keep pushing forward and forward and forward till we complete this mission of reviewing British pounds, American dollar together for 52 weeks, which will be the entire year of 2024. You're welcome once again. I hope last week was profitable for you as it was for me. And in my normal culture, by now, after watching, come on, you've watched like 20 videos from me, so you know what I'm going to do next, right? Right. So today I'm going to talk about a Bible verse which is Joel chapter 1, verse 12. And it says, "The vine is dried up, and the fig tree languisheth. The pomegranate tree, the palm tree also, and the apple tree, even all the trees in the field are withered, because joy is withered away from the sons of men." I particularly like this verse because it is speaking volumes to the time that we are in right now. Oh, my bad. Good morning, good afternoon, or good evening, depending on the part of the world you're watching this video from. So, back to the message. It is speaking to the time that we're in, right? A lot of things are happening to us because we are letting it happen. We are scared within, and our fears manifest into our reality, right? You need to create joy within before joy would occur around you, right? I used to hear Bishop David Oyedepo once say something. He says, before a change can occur around you, the change has to occur from within you. All right. I know, particularly most of the people watching this video right now, when you look around you, you look at your situations, you look at your circumstance, you're feeling downcasted, you're feeling depressed, you're feeling sad. But read this Bible verse. Let's take it backwards, right? It says, because the joy of the sons of men withered away, the vineyard has dried up, the fig tree has dried up, the pomegranate tree has dried up, the palm tree has dried up, apple tree has dried up, all the trees in the fields have withered. They've all dried up. Why? Because the joy of men has also done what? Withered. Which simply means that it is possible that the reason why you're having failures all around you and rejections all around you is because your joy within has dried up. Okay, so I really want you to take in this verse and be conscious about your joy. Okay, be conscious about being joyous. Being joyous is a lifestyle, it's not an emotion. Regardless of what you're going through, you should be able to rejoice, even if for nothing. The fact that you're still alive and you're listening to me right now, it simply means that you have a chance to do it all over again and do it right and do it better and do it excellently. But if you do not have that joy, there is no fountain for the water to flow from. All right. I'll leave you with this ideology in your mind. So, when a fat person is going to the gym, right, he's going with a mindset of the kind of body he wants to be. So, each time he goes to gym and he's working out, he's putting in the work based on the joy or the picture he has painted in his mind. And soon enough, you see a lot of people transition from what they used to be to who they want to be. Now, I'm now saying this to you. You are where you don't want to be. You're in a situation you don't want to be. You're in a circumstance of being broke, being sad, being depressed all the time. You need to have a picture of where you want to be and have a joy within you that you're going to be that person, and you continue walking towards it with joy and rejoicing in your heart. And eventually, all those things that you have dreamt about and pictured will become your reality. Okay? So I hope that helps someone today. Let's go into the chart. So this week I'm starting from the roadmap, right? For people who watched the first video, I'm sure you would see that we've been 100% spot on the weekly time frame. Now, what happened was the market came from here. We said it was going to range a bit, but the only exception was the market pushed up a bit here before dropping into our zone. And as you can see, I marked 1.2306, right? And the market dropped roughly about 6 pips out of my expectation, or roughly about 10 pips away from my expectation, and then moved what, 400 pips up, at about 400 pips upwards. What does this tell you? That precision is easier gotten on the higher time frame than lower time frame. That's the reason why you hear a lot of people say go to the higher time frame and flow with the market all the way down. Now, if you notice from the last 2-3 weeks, I've been mentioning that the market is going to be bullish, but we're looking for a pullback to take trades. But guess what? The market never gave us an opportunity to pull back. So what we simply did was went to the lower time frame. Since the market is bullish, we kept on looking for opportunities on the lower time frame to keep buying, right? So now that we have this here on the weekly time frame, we have a gap here that was created earlier. If this market closes above this level, then we may expect it to pull back, and we know that the next area is going to run to would be somewhere around here, which is 1.34967. Now you're hearing this first here. I've mentioned this level as far back as January, first week in January. Although I'm not one to brag, there's no point bragging because it doesn't put money inside my pocket. So I'm expecting that if this price should break above this high here, right? If it breaks above this high, meaning that the market pushes from here up here, right? We can then expect it to come down into a zone here and then do what? Move up here. It's as simple as that. I've explained how my system works. Look for the market, whether the market is bullish or bearish. If the market is bullish, wait for the market to pull to a low side of the previous trend and look for opportunities to buy low. If the market is bearish, wait for the market to pull back to the high side and look for an opportunity to do what? Sell high. It's as simple as that. Okay, so right now I want to see what the market is going to do this week. You can see that there's no gap on the weekly time frame, except if the market should open somewhere here. And if the market should open somewhere around here, there is a possibility that the market is going to close this gap, come below 1.2588. That's roughly about 120 pips. Drop down and then maybe continue going upwards. Okay, so this is the weekly time frame. All right, now on the daily time frame, let me take this down to daily. I'm sure all of you remember this chart, right? Okay, fantastic. Now I did mention that we want to see what the market will do around here, and I think sometimes last week, yeah, 3rd of May, no, not last week, like 2 weeks ago, the market tapped this point and then did what? Pulled back into the zone, right? And then from here, what has happened? The market kept running up. Now, for me personally, I don't feel this order block is going to hold, and because if we have this as our consolidation, right, then this is most likely going to be our what? Manipulation, right? And if this is our manipulation, we can do what? We can expect the market to do what? Maybe from here, pull down a bit, close this gap here because there's a gap between here and here, right? Close this gap that was created, I think, on Wednesday, then push above this level, right? This is the power of 3 on the higher time frame. So we have this here, right? So if the market is able to close above this level, we know that we had a consolidation, we had a manipulation, then we can expect the market to pull back into an area of interest somewhere around here and then do what? Run to the upper side. And this upper side is running to is going to be our distribution, right? We're expecting it to run into the zone somewhere around here as marked on the weekly time frame. So we could have our distribution, say somewhere around here, right? So this would be our distribution. So for now, on the daily time frame, I want to see how the market is going to react to this high, right? The market has come here, it has bounced from here. The market didn't close within this gap, so this place remains unmitigated, right? It has not been closed up, so we'll just leave it. And the reason why we're leaving it is because in the nearest future, the market may actually come back to this zone and then give us some reactions here, right? So, for example, let's say we are selling the market and the market gets here. We know there's an opportunity to do what? Take profit and observe what the market is doing. That's why we keep unmitigated areas marked. Okay, so this is what I'm expecting on the daily time frame. On the daily time frame, so I'm expecting a slight pullback maybe this week because of this um other block or this supply zone here. Then what I'm expecting a continuation to the upper side. Okay, now if you notice that there is a strong push to the upper side, unlike when we had a range here, right? We had a range here. We don't have that here. We just had the market do what? Trickle down. Then from here, give us a W formation, like a double bottom formation before running to the upside. So we can expect the market to pull back a bit and then do what? Run up in continuation. Then once we have a break and a close above this level, then on the daily time frame, we now have a confirmed bullish continuation move. So we'll just expect the market to pull back a bit and then we can take a swing buy to this high here, right? And if we get a move, say we get an entry from somewhere here, it could give us roughly about 1,000 pips. Okay, so these are the kind of periods when we'll just wake up and we keep buying GU and we'll be making money from the market. Now I'm now going to the final chart, which is the 4-hour time frame. And on the 4-hour time frame, I want to see what the market is going to do. Oh wow, MTN. Tell you everywhere you go, but the network can be bad sometimes. Okay, fantastic. All right, so now we are on the 4-hour time frame, and I actually had some markup on the chart, but it's taking time to load. These are the kind of things we battle with when you're based in Nigeria. Okay, so we spoke about this before, right? And initially I mentioned that I was expecting to see the market pull up and then drop to this point. But guess what? The market did not give the confirming drop to this point. Rather, the market just kept running to the upper side. Okay, so let me take this off. This was from last week. I'm going to take this off and then we would look at the chart together. So on the 4-hour time frame, we followed this market to the downside. We saw this range here, the manipulation, the break above this level, pullback, and then the distribution before the drop. But notice that the market did not enter this zone that I marked here because we have a supply zone somewhere around here. So I marked it as an unmitigated area, right? And after this point, the market broke down, and I also marked this area right here as an unmitigated area, just like this place. What did the market do? The market came here, tapped this mitigated area, and then did what? Dropped here to give a double bottom. Okay, the market dropped here to give a double bottom. Now remember that this place remains unmitigated because the market did not come and close this demand or order block zone. All right, I keep using demand or order block because I want to use them interchangeably for people of different schools of thought when it comes to trading. Okay, now here we have a break of structure here, right? Now this break of structure here I was actually anticipating that this candle was going to close below. Now, learn this here today. For you to have a confirmed break of structure or a market structure shift, you need to have the candle close beyond that level. So for example, if you notice here, I marked this point because this candle closed below it. I marked this point because this candle closed below it. I marked this candle because this candle closed above it, right? So here, this candle closed above it. Here, this candle closed above it. And what happened? The market pushed down. So what we have here is more of a fakey. All right, that's the word I'm going to use for it. So I marked these two areas that I want to see what the market would do somewhere around here. That was like last week. Yeah, last week. So what happened? The market just pushed up above it and then did what? Pulled back into it. And then from here, the market broke above it, giving us another what? Another break of structure here. Now, there's something about break of structure that I know and I can tell you for free. It's not every break of structure that the market is going to pull back into. That's why we have unmitigated areas, right? But most of the time, if you have a break of structure that was not mitigated, most likely the next break of structure would be mitigated. Okay, so I'm going to take this out of here and I'm just going to look for a random zone. So here we have a break of structure here, right? And we are approaching an unmitigated area, right? So what am I expecting this week? What I'm expecting this week is one, I want to mark an area of interest, which is probably an order block, and this is the most pronounced one from the origin. Okay, order block 4 hours. Fantastic. So this is the most pronounced one from the origin. Why am I saying that? Now, if you look here, this has been closed. This has been closed. This has been closed, but this has not been closed yet. Okay. And we had the market do something like this. You can see the market here, 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 push up, wick to the upper side, which is still one move. Then the market now pulled down proper. And then from here, the market pushed up here, right? So the market now pulled down here, gave a double bottom, but this is more of a fakey, this wick out of it. And then what happened? The market has pushed up here. So what I'm now expecting is the same way we had this wickish push up, we may have something like that here, like this, maybe something like this. Then we may have a break below, pull back, and then a drop into the zone, then a continuation to the upper side. Why am I showing you this? Now, if you notice, most of the time, if a trend is going to reverse, you will notice that the momentum of the move is reducing. So for example, you can see this quick move here. I was actually using my hand to point on the screen. So you can see this quick bullish move here, right? What now happened? The market now started struggling between buyers and sellers, right? And then we had another push. The market came down here before there was another bullish push. Now that we've had a bullish push, we should expect some form of struggle between buyers and sellers before the sellers actually push the price down. And then from somewhere around here, we should expect another bullish move upwards. Now from here, once it breaks this level, the market may just begin to run to a new level. Now, what am I saying here? We have, wow, I've spoken a lot today. So we have this as our previous high. And this is the high that we're looking at on the daily time frame. So what I'm saying is if the market breaks above this level, we may have the market push into the zone before we may see any major pullback and then a continuation to the upper side. I hope this makes sense. I've spoken for roughly about 20 minutes and I think my throat is hurting me. If you have any questions or any inquiries, you could reach out to me through the Twitter page or you could leave a comment below. Till next week, remain safe, remain blessed, and do have a profitable week ahead. I remain your host, Bebo King. Take care and bye bye.